Hi, welcome to this video today, which is on the 10th of February, Saturday. Just going to look at a couple of currency pairs today, which we looked at last week. They're USD CAD, USD NOK, and we're also looking at crude oil. Now, we did a video last week, and we were basically saying heavily bearish of crude. We thought we'd get a decent break to the downside, and therefore we wanted to buy the USD on the CAD and the NOK, both petro currencies, and we were aiming for 500 pips in both USD CAD and USD NOK. Obviously, USD NOK has done that. USD CAD just under a couple of hundred pips, but we expect more to come. Okay. Now, in terms of crude oil, we thought that was a fantastic opportunity last week to go short, and we've seen a decent move down, but there's far more downside to come in our view. And in terms of today's video, what I'm going to do, just like last week's video, I'm going to start with crude oil, then we're going to go to USD CAD, and then to USD NOK. Now, in terms of crude oil, I'm going to be looking first of all at the COT net traders positions, which really make us just so bearish of crude. If you're new to our videos, you don't know what the COT is, you just basically click on the link beneath this video and we'll send you more details on how to use it. But it's a fantastic tool for alerting you to low risk, high reward entries, and also will help you decide how far a move might run, which you just can't tell from technicals alone. Right, let's start with crude oil, COT net traders positions. On the chart of crude oil, just going to look at the COT net traders positions first of all, because they alerted us to the short trade. And the real benefit of the COT is not only will it help you identify areas to buy or sell into, or levels to key off, it can also help you gauge the magnitude of the move. Now, in terms of the COT net traders, commercials in red, large speculators in green. And what I've noted here is when specs move to a record net long position, the biggest, basically in the history of the COT. And it's really up into this level here, 58. They start to build up and keep expanding the record net long position. What do the commercials do? You can see as the specs step up their buying here, the commercials mirror them, the hedgers, and they go heavily short against this extreme here. Obviously, commercials, biggest extreme short in history as well. Then we start to top out here. Now, this is warning of the break, okay? Once you get, the failure really to close above 66, you've got the speculators. They flatlined for 2 weeks. That probably means the buying is exhausting, okay? Seeing look to come in. So we'll drop in a trade, and then she drops down to 58. Now, she's, at a level of support. Can she hold it? I think she can hold it in the short term, maybe. But, basically, crude, in our view, is going down to 52. It could even go lower. The extreme is still so big, and we haven't had a big stop hit yet, okay? It's a nice decline, but I just don't think the big stop hit has occurred. Right, what we're going to do now is just go to the crude oil chart and draw some levels of entry, stop, and target. We are on the daily chart of crude oil. I'll draw my levels in a moment, but I just want to go through the crude oil fundamentals, okay? What the speculators are seeing, which is not quite true, okay? And what the commercials are seeing, okay, which is true, okay? Now, in terms of speculators, I did this last week, this summer, and I'm just going to go through quickly for new viewers. They'll buy crude as a proxy trade to stock strength. When stocks are going up, all the media, they're bullish about global growth, it's expanding, all the rest of it. We know global growth is hardly moving. In percentage terms, it's not far off the lowest level since World War II, okay? It's just pure rampant speculation in stocks until they got their reality check, okay? Now, if you look speculators, they'll do the proxy trades. Crude oil is one, but just look at the whole commodity complex. Copper, zinc, iron ore, gold, doesn't matter. Just any commodity you like, speculators are overweight in long positions. They're also buying commodities because of USD weakness. Of course, if the US dollar is weak, commodities priced in dollars, that makes commodities more attractive as an investment. Okay, now I want to stress this point again. I know I stress it every time I talk about crude, but it's very important. 70% of volatility in crude is purely speculative. You take speculators out of this chart, it would look fairly flat. Okay, it's speculators who are the main drivers of price, not the supply and demand situation. Now, demand, there's been no big increase since 52 dollars a barrel. Yeah, the media will tell you there has been. There hasn't. You can just look at the figures, okay? So the demand side has hardly changed. And that's pretty obvious if you think of how much the percentage increase is. 52 to 66. That's a big percentage increase. You know, the amount of demand has not increased by that much, okay? Just hasn't occurred. But the media will tell you it has. Supply side. They'll bang on about this as well, about how the OPEC cuts really make a difference, okay? Make supply tight. They're minor. You know, I obviously got Russia in there as well, but they're offset by non-OPEC. US drilling is increased recently at one of the fastest rates in history. The US is now second to Russia as a producer. There's no change really in the supply side. So there's no big increase in demand and there's no tightness of supply. And in terms of, there's all talk about inventories, they're low. Well, they've started to be topped up now, haven't they? That's just what happens at this time of year. OPEC know that, the International Energy Association know that, but yeah, all these speculators blinded by greed want to buy crude. Now, here is the media view, and I quite like this quote. Robust global demand. Well, we know that's not true. A weakening dollar. Well, that's true. And curtailed supplies from OPEC countries and Russia, not true, had propelled oil prices to highs last month. Well, it's true in respect that, speculators have put that down for a reason to be bullish of crude. But, the facts, as we've seen, don't support robust demand and what they said, tight supply. Oil funds remain bullish after crude's worst week in 2 years. Position still amounts to more than 1 billion barrels equivalent, suggesting strong hopes of a price rebound. That comes from the Financial Times. So that's why I don't think a big stop it has occurred. It's still over 1 billion barrels long. Okay. It's a lot of barrels. I'm also put up here, bank research departments revised crude targets up, some to $75 a barrel average for the year. Okay, media is its most bullish up here, but crude isn't really getting any higher. We know specs are overweight in longs, and this is a warning that the bullish frenzy is going to peak. Okay, and in our first video on crude, we said, basically take her through this 20-day moving average and then wait for the round number to give way. Then you can go short. Okay, and obviously we dropped down. In the last video, we said anyone not in, you could come in through this near-term tail. Okay, so you could come in through there. And then what you get, a big fall down. Now for us, we can put one position in here, then we can double up on the fall down. So we had our first target at 58. So what we'll do, we've got down towards 58 level, we'll square off half our position. Okay. Now, where is crude going to go next? Well, my own view is, if you're coming in fresh to the market, she's a sell on a bounce, or she's a sell on a break of 58. Where could we bounce to? Now, you've got to keep in mind, last week, it was a bit of a perfect storm for oil in our view. We basically thought stocks would correct before non-farm payroll, okay, which they did on non-farm payroll day. And then this week we knew we'd have a decent run in crude, or we thought we'd have a decent run in crude, and luckily for us, that has transpired. Now, in terms of, if we look at the COT candle, that's the COT candle, okay? This blue one here, okay? Now, in terms of the move down since the COT report, we get the COT data on Friday, but it's compiled on Tuesday. That's why that's the COT candle. That's not a big move. Really, you're looking at 5 big points. Previous historical extremes, far less than this one, have done 10 or 15 big points. So I don't see why this one shouldn't do any different. But yeah, I do expect a bounce, to be honest with you. And if I just draw a trajectory line there, I personally feel if we do get a bounce, probably up. You have to see how this one goes. So it's very difficult because in terms of doing it now, so to speak, because the stock market is going to dictate a lot what happens next week. If the stock markets rally, you should see a bounce that level, or at least to the top of the first candle. Okay, my own view is just see how she goes. If she gets up here, just sell some weakness, stop back behind here, see if she runs down. This level for me is going to give way at some point. It might not give way early next week, but it'll give way. So if she goes on the bounce, or if she bounces up, look to sell her. If she slices out 58 decisively, go with the breakout, in my view. Because if this level gives way, then my own view is the stops are going to get run, okay? These candles around here won't provide any support, in our view. Going down to 52, possibly even a run-on down to 48 or 46. On the breakout, if you come in, where do you want to put your stop? Well, I'd be back behind this tail here. For us, it was decent. Well, it was a good trade last week. We'll cut back for now. We always do this. We'll run a couple of trades so we can liquidate out 50%, lighten up the exposure. Then we've got the opportunity to put it back in on the bounce or the break lower. So I'm looking, hopefully next week, for another good week trading crude. But I don't rule out a decent bounce before we go lower. But from our perspective, stops, the major stop run has not occurred. Okay, you can see that from the Financial Times. Speculators are eventually going to bail out, and we're going to see crude get back to reality. Right, that's my review of crude oil. Chart of USD CAD. Yeah, it's obviously my view as of right now. If you want to track this pair daily with us, you can do so in our member centre with 12 other major pairs. Right, before I draw my levels, let's just go through the fundamentals and sentiment behind the chart. The CAD had been firm on the Bank of Canada and rate hike expectations, and that's what caused this big fall here. 3 rate hikes coming in from the Bank of Canada, and then down here the market expecting more, but we've got the USD coming up. Now, what you've got effectively is the market speculators are looking for rate hikes from the Bank of Canada, possibly in the next few months. They're not going to happen. Bank of Canada has said this. They want to be cautious. They've got NAFTA talks coming up, very important in terms of trade, and could have a big impact on the Canadian economy if the US withdraws. They also want to see the impact of the rate hikes they've done. They've said this, how they affect the economy. They're also very concerned about US investment, for example. Money that would normally be flowing into Canada from the US. You've had those tax breaks from the US, which means money will probably be staying in the US or going home. Okay, so the Bank of Canada, very cautious. No more rate hikes coming in the next few months. Now, also we've got crude oil, obviously, in the mix. Crude oil CAD correlation has been secondary to this, okay? The rate hikes. Now, we already reckon that, yeah, all the bullish news is priced in there for the Canadian dollar. No doubt that if crude breaks down heavily as well, the correlation between crude oil and CAD will become more important as well, okay? On the COT report, we've got heavy spec buying of the Canadian dollar, selling of the USD dollar, and on the other side, the commercials are buying the USD and selling the CAD. I haven't done the COT chart today. You can go and look at it yourself. But in terms of how the groups have diverged, it's not a massive divergence at all, but historically, it's pretty big, okay? So that lends weight to our bullish USD view. USD fundamentals for us are bullish. Market just simply isn't seeing the amount of rate hikes coming that the Fed are probably going to put in. Now, obviously, last week we were very bullish of the USD on the CAD. When we get down here and formed this double bottom, we wanted to get in long, just some strength. We'll take a position through these red candles here and that blue at about 123.40, and then we want to see the 20-day moving average taken out. 20-day moving average for us, that is where our major position will come in. And the 20-day hasn't been penetrated for a while. We've got the big downtrend. Poke up to it there, can't get through. Poke there, can't. Poke there. Touch there, can't get through. And then down. But this is a nice, highly volatile blue candle. Takes out the 20, closes above it. Well, we're in at 124.25. And we then think the round number is going to hold, okay? Sorry, let me draw my line. So what we get, a little bit of a retracement just beneath the round number. No more sellers. Off she goes again. So we're now up at 125.79. So from our perspective, if I bring this line up, I personally now feel that any pullbacks will be held by around 125.40, okay? If I draw a trajectory line, I've got double trend line support there, okay? Now, we did break above 126. Now, in the members end, what we did was we liquidated 50% of our trade just below the round number. We want to keep our core trade in, then bought above 126.25. She's gone up. She's come back. I'm going to see, when we do the chart updates on Monday, whether I should take out 50%. Just wait for a bounce up through that 126 level, because, it's a nice move up. It's fairly aggressive. You could get some retracement, okay? So we'll see on that. But at the minute, very bullish. And I don't see prices closing below this level. Okay, so the double bottom here. So I've got two levels of support. This level of support here, I'm looking to hold the double trend line, tuck the stop back behind here. Like I said, might take out 50% to see what happens, because it's a decent profit. Yeah, where we closed 125.79, we're long at 124.25, so it's about 150 pips. Yeah, it might be worth banking in half. We'll see. Now, if we do break up again, I don't need this tail to get taken out. I just really want to see a punch back through the 126.25 level. Then I think we'll be going up to 129. And, longer term, I think we're going up to 132. Basically I see the USD as a buy on strength. Or if we do come down, I'd just be looking for her to firm up. But what we can do is, this is, I know I keep saying this all the time, we can bank out 50% now, tuck our stop in below the 125 level. We'll come out, if we're stopped out, with a decent profit of above 100 pips, because we obviously banked the half at 150. It wouldn't be ideal, because obviously we want more than 100 pips, but we could play it safe. But I'm hoping we can just spring up through the round number again, the 126 level, clear it out, going up to 129, then 132. Hopefully, we shall see. It's going okay. I thought this one would go better than it has, but yeah, one that has done a really good move, though, of course, is USD NOK, and we'll just go to that chart now and take a look at how that one's shaping. Okay, we're on the chart of the USD NOK. Now, in terms of the fundamentals, very quickly, the NOK has a heavy correlation with crude oil. It's obviously the major, or Norway is the major producer in Europe. So obviously massive impact on the NOK. Also, it's a euro proxy currency. By that I mean when the euro is firm, minor European currencies will be firm with it. You get spillover speculative buying. We noted in previous videos that the euro has helped the NOK get stronger. Okay, but it run too far on the euro, so you could buy the euro on the NOK as well. If you look at the euro last week on the NOK, it absolutely soared. Okay, USD's doing okay as well. Domestic data below forecast. There is no COT data for the NOK, but we know, spelt speculators wrong, sorry, they're heavily long from the banks and brokerages that do give reports on positions. Okay, so they're most bullish in years. Now, said it obviously in the previous video, when you get a big move down, okay, like this, it's a really steep fall. You're going to see a retracement of most of it, in our view, or maybe even all of it. We personally think all of this big steep decline is going to be retraced. Now, from our perspective, when we got down here and we got this big blue candle, we want to go long. Okay, so coming through this tail here, okay, off she goes. And we were saying in a video, one of our previous videos on the USD NOK, was basically this 20-day moving average. It hasn't been taken out for a while. So if it gets taken out, go with the break. So we come into it here, settle on it, settle back on it here after breaking higher. Then we push off and we're up and then come back. Okay. So from our perspective, this is the first part of the move up in USD NOK. I don't see any reason why we shouldn't get more upside in my view. I've got a trajectory line there, and these candles here, sorry if I can get my line in, which are the equivalent of that low. Okay, those two red bodies. And you've got a round number behind, which is 790. So if you're coming in fresh, what would you do? I would just basically wait for follow through strength. I wouldn't wait for it to get through this tail again. If she punches higher, just decent strength on Monday, I'd go with the break. Where would your stop be? I think you want to be back from this tail and this cluster of candles here. Well, these two bodies really, isn't it? So I've got too many lines. I don't normally draw so many, but that would be your risk effectively. Now, if we push off, what would be your reward? Well, I personally think 820, but really looking for 840. I just don't see why the whole move down shouldn't be retraced. NOK fundamentals basically for us have turned bearish. You got the first bit of the move up. There's more upside to come, in our view. And I think I said it in previous videos. This is a big move. If you look at it in pip terms, you look at the volatility of this pair. It's much better than trading Euro USD, which doesn't really move that much. You don't need a big position. Okay, you can have a fairly small position and make really decent gains on it. We'll see how this one turns out as well. One thing I would say is obviously last week, very, very good week for us, and I'm sure for a lot of traders, all the volatility around. And when you have a good week, you need to get a little bit cautious and yeah, don't get too overexcited, so to speak. But for me, I just don't see big downside in the NOK. So yeah, going higher in our view. We shall see. Right, that is the review of USD NOK. Also, you can check how this one goes daily in the members centre. Sorry, I've got it in as a guest pair. Right, that's the end of the video. Thank you very much for watching me as usual. Take care and have a good day.